Well, if you look at the stock of Equitas Holdings, the stock has been up for the last couple of sessions, and this is on account that the Q1 business update for all the small finance bank, within that Equitas Small Finance Bank has certainly outperformed Ujjivan Small Finance Bank as well as AU Small Finance Bank, be it in terms of the loan parameters, the deposit growth momentum, as well as the CASA ratio, wherein the CASA ratio for Equitas Holdings stands at 40% versus for the other banks, wherein it stands at close to around 26% and 20%. For Ujjivan Small Finance Bank, the CASA ratio stands at 20%, and for AU Small Finance Bank, the CASA ratio stands at 26%, and Equitas Small Finance Bank collection efficiency also has improved for the month of June versus the last month. In fact, a lot of the deposit growth momentum that we are seeing is also on account of Equitas having made good amount of investments in their liability franchise. Management did state that the HNI elite product is doing fairly well for them, and of course in a particular segment Equitas still offers 7% savings account rate. This is in a particular savings bucket. Having said that, if you look at the loan growth momentum, disbursements of course have declined for all the SFBs by SFBs including Equitas. However, the decline for Equitas in terms of the loan growth has been slightly lesser versus the other two SFBs. In an exclusive conversation with ET Now, P N Vasudevan, who is the MD and CEO, stated that collection efficiency in small business loans has improved sharply in the month of June as West as well as the North markets have opened. Vehicle finance has come up well in the June month, and he hopes that the collection efficiency trends will continue to improve going forward. Mr. Vasudevan stated that customers have now started paying back, although slowly, and the underlying business certainly has shown good resilience. Commercial vehicle business can see an uptake from the second half of the year, and small business loans have always been strong for them. However, the microfinance business will take some time to come back, as this is the segment which is at the bottom of the pyramid. Mr. Vasudevan expects the MFI book to come back probably in the second quarter, but he expects that the other businesses may come back soon. However, he stated that the overall improvement is of course contingent to the fact that we probably may not see a third wave, or if at all we do see a third wave, the timing as well as by what severity would we see the third wave. So hence the occurrence of the third wave would really be watched out for. He also stated that if at all there is no third wave, then he expects a very strong Q2 this year. In terms of the disbursements, well, as I said, the disbursements have slowed for most of the BFSI players. However, Mr. Vasudevan stated that there is no issue in terms of the demand front. The demand has always remained fairly high in terms of the segment where Equitas operates in, but of course there were challenges on account of the second wave, and also one had to be cautious. He also stated that the deposit growth momentum has been strong, and it was backed by the investments in the liability franchisee and also some of the products like the HNI Elite and the 7% savings rate in a particular bucket. And Mr. Vasudevan also believes that although a lot of the investors are now laying a lot of focus to ESG businesses, he believes that besides the focus on the ESG businesses, investors should also be asking corporates about their efforts in terms of aiding the vaccination drive. He believes that investors should ask corporates towards pitching in more efforts towards vaccination, as that would be one of the key important part towards progress and recovery.